See how we were bearish here, and then once we swept the low, we get a giant Bissy up, right? And now we're kind of in a buy model until we sweep all this. So, yeah. Yeah. But now you can see here, we put in another one, right? This right here is another one. This one right here is probably more relevant than the bullish one just because of how bearish everything is right now. Regarding the PA on Friday morning at 4 a.m., at what point would you be bullish to the LRLR at the top? At 4 a.m. Friday morning. So like here. So I would not be bullish to the highs, right? Until we were to inverse this 1 hour. Is it correct to say that breakaway gaps will be filled only after we reach DOL? That is a safe assumption for sure. Because then if let's say we were to put this gap in, right? And we were to come up and break this, then it wouldn't be a breakaway gap anymore. But now we get sent and we take out all the sell side, right? And we created a market structure shift out of getting this gap because we were bullish till that. Now, this will likely stay open till we've hit whatever draw on liquidity market needs to hit. So yeah, that's a good way to look at it. But then yeah, as soon as we get this, right? See how this is holding. Bang. Then we get this really good close above. Not only do we get the inverse, but we close above this bearish OB, right? So now we got a breaker. We have a bullish breaker and all this LRLR above. Oh boy. All right. Let me check it out. All right. First thing on the list was good liquidity sweep versus bad liquidity sweep. Very simple. My all-time favorite liquidity sweeps will always happen on a swing high or swing low that has already once delivered out of a bearish or bullish gap. Let me just say that one more time, and I'll draw it as well. So let's say we want to look for longs, right? We're bullish. We get this big move up. We want to look for longs, okay? Let's say there's a fair value gap here. All right, so here's a fair value gap. We come in and put in a swing low in this fair value gap, come up, do whatever we're doing up here, right? Now, as soon as I see this, I look to the left, right? When we're overextended, and I'm like, all right, where do I look for longs from? Seeing to the left that we have this very obvious swing low that tapped into this gap, and this gap was used to send buy side. Now, this is a really good target for me. And wow, how did that end up being perfectly at 50%? But anyway, so for that, this is going to be an amazing liquidity sweep for me, right? So we come down, leave some buy side, sweep this low. This low is going to be way more relevant to me than this low. I didn't just pretend there's no gap here. Let me just draw in some chop. Just pretend there's no gap right here, right? If we come down, this drawing is not great. I'm sorry. If we come down, sweep a low right here, we have no delivery that this low has had from previously, right? Way less relevant. But we have a super obvious swing low that's delivering out of a gap. Now we come down, sweep that low. Now I'm really interested in looking for a setup, right? Now let me find a chart example. Let's see. go on the higher time frame real quick. After we sweep that low, isn't that a rejection block? I am not too sure on that one, to be honest. I hardly use rejection blocks. If somebody else knows the answer to that, that'd be cool. But I don't know. And I don't want to try and pretend like I do. I genuinely don't know how rejection blocks work. I know order blocks, breaker blocks, and prop blocks. Those are the blocks that I use the most. So for that one, I can't answer that one. I would assume a rejection block would be similar to a breaker. Or would it be like an OB that we put in after a sweep and then we retest that? Yeah, so a breaker block will be an order block. So let's say we get this order block here, right? Little bearish or little bullish OB. And then we get another OB that closes back down below this order block. That's a breaker. So it would basically be a bullish order block that gets closed below, triggering a bearish breaker. Let's see if I can find one. Rejection blocks are made when we see 50% of wick being respected. It helps when they take out an intermediate swing high or low. Rejection block is the wick of the low or high. Oh, okay. Yeah, see, I did not know that. So, like, for now that you say that, though, right? Check this out. I literally see one already right here. Okay. We sweep this low, right? We sweep this low right here. Boom. We put in this little wick. We draw out our 50% of this wick. And here's our retest right here. Well, this is our rejection block. Quick maths. Damn. Well, there you go. That was easy. Thanks for taking me to class today. I appreciate you guys. One of the small things I know, dude. The thing is I've gone over so many ICT concepts, and I genuinely just like it's easy. It's easy for by my course. It's easy for me to just be like, all right, which ones do I like the most? Which ones do I resonate with the most? Which ones do I actually plan to use the most? Right. So for me, when I'm sitting here looking for a setup throughout the day, I'm not thinking, how do I find a rejection block and use it, if that makes sense. But when I see order blocks, that triggers something in me. When I see a breaker block, that triggers something in me. So when I go into the day, that's just not one of the things I've decided to use, apparently. But now that we've talked about it, I'm starting to see them all over the place. Can't lie. This is what happened last time we did a class and somebody was like, hey, what about order blocks? And we started going over order blocks and I was like, wait a second. Only look for them when I see us approaching a big wick. Yeah, that's fair. It's definitely using 50% of wicks that are obvious and were used to sweep is something important to do. But so bad liquidity sweep, good liquidity sweep. Now let's say, let me see, let me find one in here. Okay, here we go. So, see how this is the 5-minute time frame, right? Let's say we come sweep this low. Is this low delivering out of anything previously? Like when I look to the left here, what is this low bouncing out of? Not really anything. We could try the 15-minute. It's a little tiny 15-minute there, right? But this low is just not obvious to me. Now, when I look at these, or I see this low. See how obvious this low is? That's delivered out of this super obvious bullish 5 minute. That I would be more interested in than in something like this. So you don't want lows that are in the middle of chop. You want lows that are like, see this? We sweep that low. Look at that reaction, right? So if you literally, and this is why my setup for the PDF, this is why I say I like using 5 minute swing highs and swing lows, because they're way easier to see if they've been delivered out of or not. Right? So look at these. See how I see these two highs right here? And what's happened? We're delivering. Now we sweep those and get a setup, and that works way better. Whereas, like, dude, I can't delete it. But yeah, 5 minute swing highs and lows that are delivering from any sort of obvious gaps, those will be your best liquidity sweeps. Also on obviously session liquidities are amazing ones, but sometimes they're really far away. It's hard to wait for a setup after sweeping those, So that's pretty much it, honestly. That was like the easiest one, because do we have previous delivery from the swing highs or lows or not? We sweep them, they're more relevant versus sweeping something within this little range, right? Now we're looking for something that's a sweep on a higher time frame. See, all this matters way more. Right here. Swing high, sweep. But yeah, let's go to the next one. 0 votes for psychology topic. What? 90% chance that's everyone in here's biggest problem is psychology. Hey, nobody want to talk about it. That's crazy. Yeah, I'll post the recording too, Dan. All right, so next one. How to use ES with NQ. All right, this one I really like. So, how to use NQ with ES. We all know that ES and NQ should be moving in tandem, right? So if we put in a swing high on NQ, we should have that same swing high on ES. Okay? We should have the same fair value gap. Should have the same liquidity targets, right? So when things are not correlated, not only can you use this as a signal to just not trade, right? Like if ES is way down here and NQ is way up here, it's honestly, it seems confusing, but for me it's not, because I'm just like, oh well, then we just don't trade it, right? We just literally don't trade it. So if NQ and ES are uncorrelated, avoid it. Now, another thing that I really like doing is when I'm looking for my setups. So let's say we're like, oh, this 5 minute looks really good. What a lot of people forget to do is to hop over to ES and see if we're getting the same setup. Because let's say NQ puts this 5 minute gap in, right? Then we got a little doji, whatever it is. Then we get the inverse, right? But then what if you hop over to ES and what if you hop over to ES, right? But we aren't getting the inverse, right? So now we're getting the inverse on NQ, but when you hop over to ES, this gap is still holding, right? And I have noticed that when I take setups where we don't get the inverse on both indices, it will either fail or it will be slow, so slow. Like it'll take forever to work because you're waiting for ES to get the inverse too. So you'll have to suffer through little pullbacks, right? Maybe you'll pop up, take liquidity, and pull back, and then you're like, you're gonna get break even 10 times. So seriously, if you're looking for a setup, just hop over to ES and see if you're getting that same gap, that same setup. Those will always be the best when you get them at the same time. So many times I've gotten in a trade and been like, dude, why is this not working? And then I hop over to ES and we have a gap that's holding still, right? So NQ puts in a bearish gap. ES puts in a bearish gap. What do we use gaps for? Well, we're either going to inverse it or that gap's going to hold and then we're going to continue that direction. So if we get the inverse on one but not the other, right, it's lower probability for it to work because now this gap could potentially hold and send us to sell side again. So genuinely, if you can pair your setups with ES, do it. Like, it's just way better. I noticed that will these same issues happen with SPY and SPX that affect? Oh, that is the worst, man. Because like sometimes on NQ1 we'll like sweep liquidity, but we didn't on regular NQ, and then we get weird ass price action. I hate that. Everybody'd be like holding for these targets, and like it's hit on on MNQ too. I've definitely noticed that too. Like MNQ will sweep the intermediate term high, and like you're like supposed to have gone break even, and you don't, and then it just comes back, and you're like, "What's happening? We didn't hit the high." MNQ's like, "I did." I think there was a few times where MNQ like swept a data wick, and NQ didn't. I think that was recently, actually. Like within the last couple weeks, I think that happened. What up, Billy? So NQ and ES are not in tandem. Step away. Wait for price action to be doing the same thing. Data candle on MNQ has a huge swing in NQ. Yeah, that's I hate that. Because it's like, we're always taught not to chart on MNQ, right? That's what we've all been taught. Don't chart on MNQ. Chart on NQ. Chart on NQ. But for most of us, we're trading on MNQ. So it's like it's kind of a weird thing, honestly. It's like, should we chart on MNQ if that's what we're executing on? Like wait for the confirmation setup on NQ, right? But your targets you need to use based off of MNQ. Your targets, your BEs, everything like that. I almost feel like it's better to go off MNQ and be like, okay, even if NQ didn't get the sweep, but MNQ did, I'm going to get out. You know what I'm saying? I feel like most of us are trading MNQ. Different ways to determine stop loss and trailing stop. So this is going to be different for every person. I think NQ being so high, more people are using MNQ to trade now. Could be. Yeah, maybe the volatility is too much for. Okay, when to go break even, when to scale, or when to trail stop, right? Is that what I said? Different ways to determine stop loss and trailing stop. Okay. So this is going to be different for every person. And obviously, a lot of people, everyone's going to choose their own way to do it. So I'm not saying any of the ways that I'm going to discuss now are like the end all be all, obviously, because there's different ways for everybody. Everyone's needs are different as far as how they want to manage their risk and their trades. So all I'm going to do is give you my different ways of determining stop loss. That way, maybe it's an idea might spark your interest or whatever. But so we all know if we get the inverse above, we come back and close below, right? That's normally a stop out. Okay. Sometimes that does not always work best for everybody. Because people end up, I think what it is people end up not taking the time to actually measure the sizing, right? So they'll get in a play like this and not realize that the close back above is 70 points, right? And then next thing you know, you're like down bad. I know this one worked, but I'm just saying. Or here, let's do this one. So let's just pretend that we took this, right? The close back below is 56 points. Okay, so I want to give you some other options, right? Something that I use is a hard stop, 35 points. Okay. Sometimes if you want, you can size down, size way down and do a stop at the swing low instead. But you have to adjust your sizing, right? You have to know how much you're risking on each setup. So, another thing that I like is, where was that trade that I took? There was like a 2-minute long. Shit. 2-minute long.
What's good, you guys? Quick trade recap.
March 11th at 12:18. Wait. I can't find it, but basically inception gaps. So if you have, let's say you're taking a big 2-minute, right? So you get this big 2-minute inverse. Boom. You have a lot of confidence in it, right? And on the lower time frame, let's say you switch to the 30-second time frame, we have a BPR underneath. Subjectively, something I like to do is if we have a really obvious BPR that's underneath my setup, if I have a lot of confidence in the draw, I will use that BPR. So if the BPR keeps holding, then I'll stay in the trade. But if the BPR gets closed below, that type of thing, then, stop out. So it's so weird explaining or going over stop losses because genuinely it's something that doesn't get talked about is it's going to be different based on everyone's needs. So for me personally, I don't like being in a shitload of drawdown. So I'm like, most of the time I use a hard stop. If it's something that I want to give myself a lot of room in, then I just force myself to size down. But most people in here already know how the stop losses work. I was just giving you a few ideas of how I do it. You can also try stop losses below order blocks. Like let's say we get a 2-minute or whatever time frame inverse, right? And somewhere in here we have an order block. Like let's say, actually, let's do this. This is probably one of my favorite ways to do a stop loss, actually. It's when we get an OB with the inverse, right? So if we get an order block with the inverse here, an amazing place for a stop loss is underneath the order block, right? Because if we get the inverse plus an OB, we should not come back below this order block until we take some sort of buy side, right? Or sell side, depending on which way you're looking at it. So let's say this gap is just way too big. Like you're like, damn, under the body of the middle candle. Because you could potentially have a retest. Whoa, what are you doing? What just happened? Oh, here we go. It's just one of those things where if our draw on liquidity is correct, if our setup is correct, we get this order block, we get the inverse, there's targets above, there's genuinely no reason for this to come back down to here. So like logically, I wouldn't want to use a close back below, right? If we came back this far, I'd want to be out now because liquidity plus the inverse plus an OB. I mean, you have that much confluence in your setup. If this comes back below here, I don't trust it anymore. You know? So I read this somewhere and it's kind of always stuck with me is place your stop loss in a way that how do I word this? Put your stop loss in a place where price needs to go for you to actually think that you're wrong. I don't know if I explained that right, but like if we get a setup, here's the entry. I'm like, okay, you know what? Whether we close back below, whether we do this or that, I don't think I'm wrong unless we resweep this low. Right? So maybe I just put a stop at the low and size down. Just depends on how you want to go about it. But that's always been interesting to me. It's like put a stop loss in a place where you think you're actually wrong, right? Like where will price need to go to prove that I'm just wrong? So in an order block, in an inverse situation, price comes back below this order block, I feel like I'm wrong. You know what I mean? Like I feel like I'm wrong at that point. So that's just a few options on how I go about that. Here's another one. We put in a big obvious FVG. We get the inverse, right? Also just doing a stop at the low. Like if we left a FVG behind, right? Here, wait, let me actually draw it. Let me draw the wicks too. So if we get the inverse, right? Another good place to do a stop is literally just right here at the bottom of the FVG. Because again, if we get this crazy bullish candle and our liquidity is right, our draw is right, genuinely, I feel like we shouldn't come back down. There are instances where it does do that, but what I'm saying is there's a lot of times where we will get the little pullback and overlap, and then it'll still work, right? But the thing is don't let yourself be at risk of taking a fatter loss than you're able to just to give yourself a chance to be right. Like, this is just the stop losses is where people get in trouble the most because before you know it, you lost way more than you wanted to, right? Now you're like, oh man, I have to take 1, 2, 3 trades just to make that back. You know, so man, stop losses are probably just as important as targets and delivery and everything else that we use for our confluences, right? Like knowing where you need to stop out and how much to risk for that is so hard to do in live time in the moment because like when we're like volatile and we're taking 30-second plays, sometimes they trigger so fast and you're like, dude, shit. I got to take this. But then you're like, oh, damn, I'm already in. And I realized it's a 50-point stop loss. What do I do? These are some options to do in scenarios like that, I guess. You run into that? Yeah, because you're just like, oh, this play looks like a banger, but you didn't sit there and you didn't go, so if a close back below would be, and this is what I hate about the close back below. I genuinely hate the close back below because, dude, if we have a 40-point candle, right? Dude, it's possible that this pulls back way the frick down here before we even get the close back below. You know, like what? Now you're just rough estimating. Like you're like, oh, we get the inverse here. A close back below would be roughly, roughly. Like I don't want to stop out roughly anywhere. I want to stop out at the right place with the right risk. So it's like I don't. That's why I hate the close back below. I've been trying my absolute hardest to figure out better ways to put a stop loss. The close back below is too much for me, and I feel like that's how people end up getting wrecked. We'll get a pullback, 40, 50 points, and then like before the close even happens, you're like, shit, and then you get out, and then it doesn't even close and comes back up and starts working anyway, and then you're like, bro, are you kidding me? It's just not for me. I don't like that. Like, it's stressful, dude. I need to have a hard stop. I don't like it. Can't do the close back below. This could easily rip down 30 more points, 40 points before we even get the close below. So I know that's the way Dodgy teaches it, but that is my absolute least favorite method, and it's for these reasons. What's next? Best places to take profit and go BE. So, best places to take profit and go BE obviously are always going to be swing highs and lows, ITA, intermediate term highs and lows. And something else that I really, really like doing is, let's say, here we go. Let's say we're just in this long, right? So we're like, cool, we're in this long. We want to target here, right? So there's my target. If I like explaining this one a lot. So notice how we have this swing high and this gap, right? Once we sweep this high, I will never, ever not go break even. Like, never, right? Because we have a bearish gap and we have a swing high. So now we put in a protected high. I can't not go break even. But let's say, for example, that there was no gap here. Let's say that in this gap here, it looked just like this. Right? And there's no gaps. We just keep leaving little clusters of wicks. Right? Now, I don't expect this to turn around. Right? I'm going to find somewhere where we have highs that actually has a gap that we're rejecting from already. So like these up here. Right? Now, these highs are inside of this 3 minute. So honestly, bro, if we get in this setup and there's no gaps, it's just a ton of wicks right here, this is going to be my TP. I can't lie. Right? Like I'm going to put my TP here. But with these gaps, when I see these gaps, I have no choice but to go break even when we sweep that first swing high. Just simply based on liquidity, right? So if we are going to keep going and push up through this gap, that's great. But if we sweep this high and get a bearish reaction and it wants to reject, there's no way you can't not be break even here, right? So genuinely do your break evens and your take profits based on where we can turn around from. So if you're in a long, find places where we can reject from. Make those your take profits, make those your scale. Or sorry, I'm not in scaling yet. Make those your BE. Right? If there's no gaps and liquidity is higher, then go break even at 1R. However you want to do that, but always check for spots where we're going to reject or bounce from, and that's where you'd want to go break even at. So like, let's just say for an example, here. So let's just say for pretend that we got this inverse right here, right? What do I see when I look to the left? I see some wicks, right? But what's to the left of those wicks? Nothing, right? There's no gaps. There's only more wicks higher. So if we were to take this trade, we get in here. I'm not gonna go break even here, right? Is this an ITH? Yeah, sure. But why would this turn around here, right? There's no gaps. There's no gaps to the left of this ITH. The only gaps are up here further, right? So I'm not going to go break even here. I'm going to go break even here. Why? Because even though we do sweep this little wick, there's no gaps. We sweep this wick, though. Now we have a big-ass gap in the way. So, boom, we reject super hard, you know? So you would want to be out of this. You don't want to be in this anymore. So that's one of my favorite things is like when you do locate a break even point, dude, also check, hey, is there anything else to the left of that would slow us down? So check this out. Here's this one. Let's say we take this, right? Here's this little wick. So if you were to go break even here at this swing high, even though there's no gaps here, right here to the left, you would get wicked out and break even, right? When I look, I'm saying, oh man, I don't see anything that should slow us down until up here, right? Why do I choose this? Because this is a swing high that's inside of a bearish gap. So I'm not going BE till there, right? And then my TP would obviously be wherever. But yeah, so I know we're always taught right when you hit the ITH or ITL, but there's times to be subjective because if there's no fair value gap near that ITH or ITL, we're probably going to go further. So that's just a good way that I like to use to actually give my trades a chance to work because it's easy to go break even too fast. Honestly, it really is. Also adding where to scale. Okay, so actually that is going to be very similar to what we just went over. So scaling at ITLs and ITHs are honestly clutch. But only ones where you think that we're going to reject from. So again, like I said, if we were in this setup, we're in this long, right? I would probably scale here because I think that this is a spot where we could reject. If we didn't have any gaps right here and it was just like this, I'm probably not scaling until I'm at 1R, my stop loss. So scaling at places where we're going to reject is smart because then you don't give up your whole bag if we do reject and it comes back to entry. As far as trailing stop goes, if you're in a long, a great place to trail, like let's say we're in a long, underneath order blocks, right? So let's say we get this long and we're pumping. We put in an order block right here, right? We're almost to buy side, but we put in an order block right here. A very safe place to trail your stop would be underneath this OB, right? Because if this OB is going to work and send us to buy side, then you shouldn't have to worry about it. But if this gap here holds, right? If there's a gap here holding, then it can fail. And then you risk giving up your whole bag. I can't tell you how many times I've been up like 50, 60 points, bro, and just been so stubborn and watched it come all the way back. And so I don't do that anymore. Got a trail stop. Another good place to trail stop is, let's say we're pumping and we start stalling and putting in swing lows. Underneath these swing lows would be a good place to chill your stop. And you can also trail based on RR. That's another way I like to do it. But yeah, I think that's pretty much it. So you can also do, let's say we get a big push up, we're in a long, you can also measure out your 50%, right? Trail stop at 50%. You could also trail stop underneath FEGs that get left behind. So let's say we pump, right? You're in a long, we're doing this, then all of a sudden we go and get a big FEG, right? Underneath these FEGs is a really good place to trail stop, because if we put an FEG sweep buy side, what happens after we get that? Most of us start looking for a short, right? So if you want to try and hold for longer, you can try and trust these FEGs. 50%, I honestly would probably trail higher than 50%, because if we're coming back down to 50%, that means I've probably given up a lot at that point. So like, let's just say I'm in this short from here or whatever. If we get down this far, I want to trail my stop closer than 50%, because we come back to 50%, we're giving up, 26, 30 points. Whereas you could scale, or you could trail instead, if we're in a short and we put in this bearish FEG right here, boom, you could trail, here at the top of this FEG, because then if your trade is going to keep working, this FEG should hold, right? So when you're in trades, pay attention to if we're putting in order blocks and FEGs, and how we react to the FEGs that we put in. So if we're in a long, we put in a bullish gap, and all of a sudden we just start overlapping the whole thing, closing below it, right? That's not good. If we put in a bullish gap, we chop, we wick down and get a really nice bullish reaction out of it, that gives me more confidence to hold my trade. But if we start disrespecting our gaps and closing below and doing all that, maybe I start trailing closer now, or scaling. So, yeah. I think that's going to do it for me. Yeah, no worries. I'll post it. So, yeah, it's crazy getting we had all these people voting and selecting things, and then none of them showed up. Makes sense. On the mental, anything other than white knuckling through FOMO thoughts and other issues? Could you explain that a little more? Hang on. Okay, I'm back. While in FOMO and intensity builds up, wanting to press the button when one knows they should not, I can only think of just hold on tight and think don't do it. So this is going to also be something that's different for every person. If you're, so it sounds like you kind of already are able to identify the triggers when they're happening, right? So being able to see that you're getting to that point before anything bad happens is already a good start. So take full advantage of that and recognize that it's happening and just get the hell away from your computer. Just walk away for a little bit. Seriously, just go give yourself 10, 15 minutes and come back. Because if you're feeling FOMO, it's probably because you missed your entry or you feel like you're too late, right? So if you're starting to feel like you're too late, then what's the point to sit there and stare? The only option you would have would be to wait for a new setup, right? So it doesn't do you any good to sit and stare at the FOMO as it's happening. Like, and this has been my best friend. Like, I'm sure Amy can attest. My best friend has been seriously just getting the hell away from my computer. Because obviously it's easier now because like I'm mostly streaming, right? When I feel FOMO during stream, obviously I'm not going to do anything stupid, but when I'm having FOMO by myself and I'm like, maybe I like thought about taking a setup but didn't, and then it starts working and I'm like, dude, come on. Like, the only thing that resets me is just walking away, because I will sit there and trance out and be like trying to plot ways on how I could get in, even though I know I already missed the setup. And like, the fact that you're able to see it before it's happening is something you should really take advantage of. Like, once you feel that, once you start noticing it, poop, I gotta go. Like, set a timer on your phone, 15 minutes, walk away, do something else, and then when your timer goes off, come back. But the worst thing you could do is sit there and start like mentally plotting. Trade of 8 lockout is goated. Yeah, that's fire. I forgot that they finally released that. But yeah, like, I have to walk away, bro. when I start feeling like I'm gonna press the button, I have to walk away, or the odds are I will. So once I start noticing, oh, bro, you're about to do something you were gonna regret, I'm like, okay, like, and I just head out. Like, I just head out. As soon as I start feeling like, dude, you're gonna regret this, boop, go hang out with Amy. Go pace around the living room, do something else. So that's how I usually go about it. Trying to come up with a way to like prevent, like, make myself handle it and sit here and watch is just not gonna happen. It's not. You'll reach a point. Yeah, you did. You'll reach a point where you won't even notice how bad you're sitting there staring and thinking about it. And then every little candle movement is giving you anxiety because you're like, man, I missed it. I should do this. Maybe if I just, nah, just get out of there. Exactly. You're putting yourself through, Amy and I call it the trance. Like, she's like, you trancing out, my love? You know what? Yes. Like, I am. I got to get out of here. Like, I feel FOMO. I feel like I should be in a trade or done trading, and I'm just sitting here staring, imagining how I can get in and do it, and you just put yourself through anxiety. Yeah, exactly. You're just stressing yourself out. It does no good at all. During those times, thank you for deleting that. During those times when I know I should walk away, I feel I'm missing out because I am not at least paying attention to PA, thus not learning. Yeah, but what you are learning is discipline and self-control. And let's just be real. If you're feeling FOMO, it's not because you're missing out. It's because you already missed it. So to keep watching, you're not fixing anything. To keep watching, you're hoping that you'll get another setup right now. Like, you're just hoping and praying, basically. So if you've gotten to the point of where you're like, dude, I have mad FOMO, that is already your first indicator that you're not in the right headspace anymore. Like, and it should be addressed immediately before you have a chance to ruin it. So, but yeah. All right, everybody. I think that's going to do it. That was fun. And I'll post the recording. So, but have a good weekend. Next Wednesday should be insane. I don't know if anyone saw the news, but next Wednesday should be absolutely insane. So we're going to do AM stream and PM stream on Wednesday for sure. But all right, I'll see you guys later. Peace. Have a good weekend.